Good morning. Welcome back to Market Day Report. I'm Tony St. James. Let's get our Wednesday rolling and take a glance at how the markets traded overnight. Now, we'll open back up in just a little bit this morning, but we'll start with the corn market in overnight trade. Couple of pennies higher on the September at 377, actually near the highs of the session. December at 399 and a quarter, penny and a quarter higher. Are we looking at a possibility of a $4 close today? Our next guest will help us figure that out. Soybeans in the overnight session up 5 3/4, 963 on the September. November 981.5, 5.5 higher. Let's go through the wheat market. We'll start Chicago. September at 529 3/4, off 3 1/4. July 591 3/4, down 3/4 of a penny. Hard red winter wheat, same story. Front month 544 1/4, off 1 3/4. And July at 583.5, down a penny and a half at the bottom of the trading range. Spring wheat 2 cents higher on the September at 592 1/4, and the December at 607 3/4, penny and a quarter higher. And the cotton market trying to make a run at 70 cents today. December 69.75, up 41. Well, our guest today is Brian Hoops. Brian's with Midwest Market Solutions, president of Midwest Market Solutions in Springfield. And Brian, as we start, really, a couple of things we're watching on the grain side, and that's the Pro Farmer Crop Tour. That's one, right?
Yeah, exactly, Tony. Good morning. One of the things that we are watching real closely is that tour and the results. And yesterday they wrapped up the second day of the tour. Nebraska and Indiana was kind of reported yesterday after the close, and they're moving through Iowa and will work their way through Illinois, kind of meet up into the central part of the country and into Minnesota over the next day. So we expect to see some variable yields. Kind of depends on where they hit in parts of Iowa. I've seen some of the tour lakes are going to try and hit some of those areas that have been very wet, but maybe not get into the extreme conditions. But as they go into that northern leg up into the Spencer or Highway 18 area, that's where they're going to find a lot of that crop that was heavily logged by water, and we could see some lower yield estimates. But as far as what they saw yesterday, the state of Indiana, 187.5 bushels per acre. That's up over almost 7 bushels better than last year's tour results. And for Nebraska, similar findings, 173. That's about 6 bushels per acre better than what they saw a year ago. So the trend is, in those two states anyway, to see much better yields than what we saw a year ago. So it will be interesting to see what they find out in Indiana and in Illinois. I also found it interesting just from a chart technical perspective, the average price over corn for the last 16 trading sessions is $3.99. That's when we closed overnight, $3.99 1/4. We're right in this area where we've been trading. We're going absolutely nowhere for the last 2 weeks in this corn market. Just a real sideways type trade. A couple days above some resistance, a couple days below, but we can't seem to break out of it. We're kind of stuck as like a magnet to this $4, $3.99 area. What's it going to take to get us either above or below that? Probably some sort of a significant change in the fundamentals, either a bigger yield numbers being confirmed, push us lower, or maybe less yield and a market that's going to try and move higher. But certainly weather is an important factor right now. Still looking at warmer, drier conditions for the next to end the month of August. That'll be an influencing factor. And we did have a couple more sales of soybeans this morning, 132,000 to China, 110,000 beans to an unknown destination. So our string of strong private export sales continues this week. We've had sale announcements every day.
China importing soybeans in July, and 92.6% of all of the soybeans they imported came from Brazil. The U.S., less than 5%. Let's go from soybeans and row crops to livestock. Brian hangs around and visits with us about cattle and hogs. That's coming up. Market Day Report continues after this. Welcome back to Market Day Report. It was a brutal session yesterday in the cattle market. Live cattle futures settled lower as the October slipped 342, 175.60 with the D's at 175.10. It was off 327. And for the feeders, 477 lower on the September at 234.50, but still off of the day's low. October, November, January, all in the red. And what about the hog trade? Yesterday it was lower. October down 4 dimes at 76.40, and the December at 68.10, down 65. I'm going to bring up the 6 month for December live cattle as we bring back in Brian Hoops with Midwest Market Solutions. And Brian, absolutely hammered yesterday, and I guess we knew lower prices were coming at some point, but to get a lot of that in one day, pretty rough.
It's tough to stomach when it happens all in one day like that. You know, we've been talking for weeks, it seems like, about the cracks in the fundamentals of this cattle market and why you need it to be hedged. All the concerns about consumer demand, consumers backing away from higher priced beef, turning to other cuts of meat, maybe the supply is starting to increase at some time during the third quarter. We're seeing all that kind of hit here at once, and it's almost eerie similar to what we saw a year ago, where near this time frame of the year, we saw a huge dump in the futures as well, in the live cattle as well as the feeders. And so yesterday, new contract lows across the feeder cattle market. Live cattle, we saw some weakness as well. A lot of sell stops being triggered as we hit those contract lows, or in the case of live cattle, new lows for the move. So a lot of it was technical based. I think we can recover some of that today, but you still have negative packer fund margins to work with, lower box beef trade to work with. You have heavy steer carcass weights, 28 pounds heavier than a year ago. We did see some cash trade developing yesterday at on a dress basis. So we're $293, $295. $3 to $5 weaker than a week ago. And coming up on Friday, you have the cattle and feed report. And again, on-feed supplies steady to maybe slightly above last year, whereas placements come in well above year-ago levels. So, yeah, not all that great fundamental news right now, combines with a lot of technical weakness. So you have funds kind of abandoning the long side of this market. Can we recover from a technical standpoint today? Probably a little bit, at least anyway, have some sort of a bounce back. But to carve out a longer-term bottom, we need better news, better fundamentals, and we just don't have that right now.
President, Midwest Market Solutions, it's Brian Hoops. Thanks, Brian. We'll see you back here tomorrow as well. Again, cattle on feed report set to come out at 2 o'clock on Friday afternoon. It comes out after the close, so no trading to affect or will be affected by that. We'll get all of that on Monday.
Right. We'll see how it changes things on Monday. All right. Thanks, Tony.